Episode of the Balanced Growth Show. I'm your host, as always, Dr. Travis Perry. Thank you for listening, for being here. And we have two amazing guests that I'm about to introduce to you today. The first one is Justin Anderson. Justin has been providing financial advice to clients since 2002. He's at Cambridge Advisors and specializes in investment management and research, financial planning, and retirement plan solutions. Prior to joining Cambridge, he was an investment rep with Edward Jones. He's a graduate of University of Nebraska at Lincoln, and he has served as moderator for his Christian Businessmen's Continuum and as a board member of the Western Douglas County Chamber of Commerce. In addition, he's done some great work in leadership in his church and has led the Financial Peace University. Welcome, Justin, here to the show. It's great to have you.
Hi, Travis. Yeah, appreciate it. Thanks for having me.
Absolutely. Next, we have Brad Cahoon. Brad is a mortgage loan expert and property and casualty insurance agent, leading a team of professional mortgage loan originators and insurance professionals. He oversees a residential mortgage company, Global Home Finance Incorporated, originating conventional FHA, VA, jumbo, USDA, rural development loans. Over the past 13 years, Brad has worked hard to build a dedicated team and skilled and seasoned mortgage professionals to effectively serve all clients who call on Global Home Finance for their financial needs. So welcome to the show, Brad. Thank you also for being here.
Thank you, Dr. Perry. Thanks for having me.
Absolutely. As we got you both now here in the show, I'd like to do is just quickly allow listeners and viewers to be able to get to know a little bit about your background. How did you get to where you are at? Just a quick story telling us about your route. All routes are not created equal to business ownership, to entrepreneurship, and that obviously is no different for the two of you. So I'm going to ask Justin to put him on the spot. Justin, why don't you tell us a little bit about your quick story here as an entrepreneur?
Sure. I got into the industry maybe a little bit different than most people did. I actually have a physics undergraduate degree, which it's not an immediate jump to finance, but I did go back and get an MBA with a specialization in finance, which really got me interested in pursuing it. And it wasn't my first job out of college, but quickly wanted to get into the investment advice business. Didn't really know the different structures of companies at that time. Ended up landing with Edward Jones, which was a great place to learn. I mean, they have a great education program. They handled you through the process of getting all your licenses. They set you up in an office once you qualify for it. So I was there from 2002, actually got licensed in 2001, but from 2002 when I started until 2007, I had grown the practice to about 300 families. And at that time, I started looking around saying, boy, I'm not sure I can do this for 1,000 families. But I went and talked to the top producers in my area, and they were seeing 3,000 families. And not only for my personal balanced work-life balance, just being able to service the clients like I told them I was going to, that did not seem sustainable. So I actually started looking around and saying, what other business models are there to offer investment management and financial planning advice? Happened to be that there was a gentleman at my church that owned the firm I'm at now. And he was still working, but he had recently transitioned it to his daughter and another person here. And they were looking to grow. And so it was a good fit for me at that time to jump in 2007 to move from a commission-based structure to a completely fee-only structure, which was great. But it did happen in 2007, right? So I went from a commission business where it didn't really matter what the market was doing as long as I was bringing in assets, I was getting paid, to being paid on the assets I brought in, and then the market proceeding to fall apart for a few years. And so through that time period, the focus on balance became very important, right? Not only for me, but to keep my clients balanced and focused on the right things. So that was a very important time, and I'm very thankful for being at this firm and with the owners at the time that are still here, because we managed through that, not easily, but I think in a very positive, proactive way. And then coming out of that, we were in really great shape. And 2 years ago, I was able to buy in and become a partner of the firm. And so now we're looking at our next stage, which is probably the focus of this particular podcast, which is growth, right? So we are putting some things in place that I'm sure we'll talk about later. But that is the 30-second overview of my career.
Yeah. No, I really appreciate that. What I get from you is, hey, you were looking at business model for growth, for sustainability, also for balance, and it just wasn't there. And so, you made a shift. And congratulations. There's a lot of people I know who would love to be where you're at, but they never made the jump, right? I think entrepreneurship, growing your business, there's risk, there is opportunity, and knowing when those two can match up at the right times, even in perceivable times like 2007, 2008, which we all remember, and maybe some of us don't want to remember, but we learn from those challenging times and from mistakes and from hopefully the things we do right. So thank you, Justin.
Great.
I really appreciate that. I'm going to ask the same of Brad. Brad, tell us a little bit about how you got to where you're at, being the big cheese, as they say.
So I ended up kind of similar to Justin. My background was actually computer information systems is what my degree was in. I graduated the semester of 9/11 from college in CIS, which was a bad time for getting jobs. My friends were getting laid off that already had jobs. And I ended up in mortgages in 2003 working for Citibank. And so 2 divisions there. I was loan processor, then a loan officer, and then moved over to Countrywide, which is now Bank of America Home Loans. And then went to become a team lead at a small mortgage banker called Dallas Home Loans, which doesn't even exist anymore because of 08. Then became a branch manager for a company called AAA Worldwide. And also that was in 07, but I had to transition becoming my own mortgage broker very quickly because they were going out of business and it was apparent. So in March of 2008, I got my broker's license and started originating loans as Global Home Finance. Never looked back. I kind of say we were forged in the fire because it was tough times in mortgage. The housing collapse, everyone was blaming that on mortgage people, which, rightly so, probably to a degree. And I was still pretty green behind the ears or whatnot, and didn't realize maybe the extent of what was going to happen. I don't think anyone really saw the future in that, or else maybe I wouldn't have stuck in this business. But it made us very efficient and really to become masters of our craft, become experts in originating loans. And we definitely changed the way we did things because of that. The mortgage types we did changed. The product sets are not even close to the same, and the guidelines and rules today are much different than they were before 2008 in mortgages specifically. And so we really have grown with the time, so to speak, and we've gone from where we were occupying 1,200 square feet, well, really just me and my brother out of my house, and then 1,200 square feet of commercial space to now about 5,600 square feet, and have a very central office in the North Dallas area. So we've grown from serving just a few people to about 5,507 past clients now as of the end of last month. So we are affecting the community in a positive way and making a difference. When the banks say no, often we say yes, and we're the difference in where people live and how their lifestyles are because of the financing we can provide them.
Seems like I'm seeing a theme between both Justin and you, Brad, forged in the fires, right?
Yeah.
There are definite issues. Like you talk about 9/11, you talk about 2007, 2008. I know exactly where I was. I knew where my business was. So this really resonates with how, you've taken businesses at certain periods of time of probably inopportune. Most people would say inopportune.
Yeah.
And made something of them. You've grown them to where you're at. So that is to be commended. And quite honestly, I think that's so I see with most positive entrepreneurs is they persist and maybe even start when others, quite honestly, are putting their heads in the sand and saying it's over, right? They're giving up. So good job, both of you. Good on you, as they say in the land down under. So I'm excited to chat with you about how you've done this. And Brad, since I had you last, I'm going to put you on the spot first on this one. What main method or two has your company really used to grow despite these challenges?
Okay, so it's changed. So originally we were big in direct mail. Okay, we used tons of direct mail to go after people who were on arms or other things back in '08 that need to refinance and fix mortgages, and then the rates went down, so we were even going after HARP loans, home affordable refinance, which doesn't even exist anymore. And so now it's more realtor business. Like I host a couple of events a year for our referral partners, and we get them in here, give them some good barbecue. You know, we're in Texas, so we give them some good barbecue, or we give them some nice other food, Mexican food, and get them in here. Cinco de Mayo, we had an event, and you just get a big tent thrown up because it's pretty warm already in Texas, and do some belly to belly or face to face marketing, and just tell them you still love them and that they're your favorite, and you want to keep earning their business.
Yeah, I love it.
Yeah.
I love the transition there, because isn't that interesting how it seems like so much marketing has gone virtual or away from the snail mail. It's all online, to being a total differentiating factor of being face to face with somebody.
Yeah.
It's absolutely incredible. I've seen a big wave of those who have in-person clients to be more in person, which is awesome. I love that. Justin, how about you guys? What has been one factor, one thing you've done to really help grow the business to
Sure.
this point?
I'm going to give you two. One which you probably can't replicate, and the second one, which I'm sure you're going to echo, is important. The first one is time in the business, right? So we've been a fee-only RIA since 1990, which gives us a leg up on most fee-only advisors just because they haven't been around that long. So that helps. That one's hard to replicate. The other one is we started with I don't know if it was a purposeful focus, but a focus on the medical community. We have a lot of physicians per capita in Omaha and Lincoln area, a lot of research hospitals here. And so that became a niche that then helped us grow initially. I would say that we're just now entering the phase of, okay, what we can take the expertise that we've gained in those areas and we can apply this to other demographics, right? And that's where we're at right now. But I would say that was the way that we've grown to where we are today.
I love it. Yeah, kind of a similar theme there. I love where you're both going. You've been able to adapt, see the change, and roll with it. So, I mean, I know when COVID hit, there were a lot of people who were just sinking their head in the sand. And the ones that came out swinging, I mean, really, they see that as a pivot mark. Like, it's really the Great Recession. It's, maybe even back to 9/11, Great Recession, and COVID. That those are really the three things we hear constantly as we're interviewing entrepreneurs. Like, tell us where your strengths have been. And they sometimes will talk about these events that have helped them to be stronger. So I appreciate your answers on this one. Justin, I'm going to have you kind of dive deeper on this next question. What have been some of your challenges in the growth side of things for the business, given all the change, given all the new direction, as you're moving forward?
Yeah, it's a good question, and one we wrestle with quite frequently here. We we are very small shop when it comes to number of employees, and 4 out of the 5 people that work here are client-facing advisors that are doing the money management, which is a very individualized model, right? It gives us a lot of differentiation between other businesses, but it's also harder to scale because we don't delegate much of anything. So we've come to the conclusion that we can either delegate the business side or we can delegate some of our client services side. And just recently, in fact, he'll start February 1st. We decided let's start with delegating the business side of the business. And we hired an operations manager who's kind of a tenured CPA audit type person to come in and take over everything business related for us. Now, that's obviously going to be a process, but we do think once we've turned over any business function, from compliance to insurances, anything you can think of on the business side. It will just free up more of our time as advisors to stay in touch, closer touch with our current clients, but also maybe to grow that client base. And eventually, we hope to even be able to outgrow our client base and have to hire other advisors. But this is where we're hoping is a first step to unlock some growth.
So let me ask you a follow up on that. Having an operations manager, has that person been hired? Are they starting to work? Or are you moving towards that at this point?
Yeah, so they start February 1st. So
Okay.
it took us, this is one of the hard parts, right? I mean, we made
Yeah.
this decision over a year ago, but finding someone that was the right fit for not only us culturally, but that we thought could handle everything we're going to ask this person to do was not easy.
No, no. In fact, we're actually in a search for an operations manager, so I get
Yeah,
it.
yeah,
We know that's actually one of the biggest issues, right, of the great rehire right now is
right.
finding the right people, the right fit, who have the mindset they're willing to work and making it work out. So I was going to ask you if they've already been hired. Tell us how that's changed, but I'm going to ask you in a different way. What are you hoping that will do? What are you hoping that will do to help free you up and create better balance? Because I think that is where, you were talking about before. That's really kind of the reasoning to help you
Sure.
delegate and free up that balance.
So right now, the three of us owners kind of divide up all of the business functions, and I'll speak for me personally, not for them, but those business functions are not, they're usually not a daily thing. It's something that comes up once a week, once a month, once a quarter, and it takes a ton of time to go kind of relearn. Okay, what was it that I did last time? What do I need to do next time? Is there anything else I need to put in place? And so I think there's a lot of wasted time and effort because it's not someone's dedicated job. Our hope is that someone that does this daily, that when those things arise, it's just part of their process, and they get it in and out the door. And eventually we don't even have to know that it's happening because in the background, he's taking care of it. And our job is just to keep the clients happy. That's the hope anyway.
I like that a lot. In my book, Achieving Balance, we talk about working in the sweet spot. And it's very difficult because your sweet spot is really your top 4 or 5 activities that's worth your time. It's also where your best energy is. If you're not working there, you're doing really somebody else's job. And
Right.
it's those other priorities that I tell, okay, now you draw a line below this. This is where you either, delegate it, delete it, automate it. And, if part of delegation is you hire someone, now you have all of these activities ready to say, okay, here you go, take this and run with this and train them and all that sorts of thing. But really being in your sweet spot, the idea is that you have greater professional balance so you can have better work-life balance. So I love that that's the energy, and I hope that goes really well for you.
Yeah.
I'm
Thank
gonna
you.
put Brad back on the spot. Brad, for you, what has been one of the biggest challenges as you've gone through these times and changes for your company to continually grow?
So especially during 2000, coronavirus for mortgages was a huge opportunity to make a ton of money. The rates went down to record lows, and so retaining and hiring the best people and training them. That's number one, our biggest struggle.
Yeah, and right now, what I'm noticing a lot with your industry is just it's kind of the reverse, right? The rates are
Reality.
going up. People have stopped buying as much as they had right during COVID,
Yep.
and the resettling has happened. So retaining that top talent, what is the most difficult thing about that for you guys?
Well, when your volume goes down 43% and the industries is down 67%, we had to let go of half of our staff is what had to happen. It's a pivot, and it's unfortunate, but when you work in a business that's related to real estate, that's very cyclical, and so rate sensitive, it's a part, unfortunately, of kind of gleaning the weakest links out of the business, and it happens every few years. You see it.
Yeah. Yeah, and you've been in it long enough to know it's a
Yeah,
cyclical pattern.
yeah,
It's you're hiring and then you're letting go, and that's a difficult part of that business.
yeah. You have to
Now,
manage the numbers. If you
yeah,
If you're
Yeah.
not seeing the production, it's just unfortunate. Maybe you love to work with the people and they're great people, that you can be friends with, but if they can't make the business profitable and help you keep on your course, you just have to do what's best for the business.
Yeah, I appreciate that. And I know you both have talked. I like to look at business as a team approach. You've got the offense and you've got the defense. The offense really has, marketing and sales. The defense has operations and fulfillment, right? You've talked,
Yep.
actually, both of you talked about these, either side of this, just depending on the question we've asked. And as we're growing, oftentimes we think just about the offense. Well, I'm sending out mailers, I'm doing referrals, whatever works for you, right? But in order to keep clients there, you have to have great fulfillment. Something that Joseph Pine the second has brought up is this crazy diagram of essentially going from a commodity to a good to a service to an experience to even a transformation. Let me ask either one of you here on the spot, if your ideal clients, where would they say? Would they say that they're having a kind of a commodity or good experience where like, hey, there's been a quick exchange, but they could get it from anyone. They have a service where, hey, they felt like you were helping and serve them, or they had this great experience where, quite honestly, a lot of businesses are trying to transition to. They're trying to get to this experience feel. But that last one really is transformation, where they could actually go back and say, did you have a transformation? Could you say, before I met you, I was here. After your product or service, I'm now here after this transformation. I'm curious what you guys might say about that. And Justin, why don't I have you go first?
Yeah, I'm not going to say that it can't get better, right? It can always improve, but I would say we're past the service stage. I don't know if we're to the transformation stage yet. For some clients, we are, right? I mean, in my business, your personal financial situation becomes important when it becomes important to you, and
Right.
it's not always important to them when it's important to me, but at some point on that journey, usually when it's going to their retirement or have a big transition, something like that, then it becomes important, and that's where we're able to add the most value. So I think if you ask those clients, they probably would say that they're transformative because maybe they wouldn't have been able to do what they do now without the assistance that we gave them.
Sure.
For the rest of them, it's probably more, we offer more than a service, but maybe not to that transformation level yet. It would be, we talk about different ways, different processes that we use to keep clients engaged even before they feel like they need us. So I'm always looking to improve in that area.
I think that's fair. I think you're talking about different types of clients. Some people need a transaction, right? They need a specific thing right away. And if you're giving them good service, that's great. But I know also in your industry, financial advisors really are wanting long-term clients. So they don't want to lose a good client. So if you
Right.
think about your ideal clients, Justin, what percentage of them would you say would, if I interviewed them, would say, yeah, definitely a transformational experience with Justin?
I would say probably more than half have reached that stage where they've got to that transformation. The younger ones, maybe not yet, right? They have other things that are biting for their time and attention and are a higher priority. Uh, by the nature of our business, right? We have a higher minimum than most. We have a little bit stricter criteria to become our client. So there's probably a higher degree that are ready to make that transformation. So I would say that's probably where we fall right now, at least 50% or higher.
I love it. And Brad, for you, I'm going to ask you a little bit differently. I know your business model is, it's similar, but not exactly the same as a financial advisor. But in this world that we live in, with this expectation of having a transformational or at least great experience, right? You've got to be kind of in between at least. Um, there's scale to grow your business is a struggle because we can't carbon copy ourselves, well, at least not ethically, right? And have two Brads running around. You just can't do it. So part of the transformation is to be able to have a system in place that your whole company can run on. Tell us about how that's working or not working. I don't know, but tell us a little bit about is there a system in place for all, do you have processes for everything so that your clients really are buying into your system, or are they buying Brad?
So the clients are buying into a system because it's not just me. I mean, I take, the clients I have and take an application, and then I structure the um, mortgage security to what I think is going to be the best solution for their needs. But it's kind of like a doctor. If you don't have a good nurse, then the prescriptions don't get called in, or they don't end up at surgery in the right place or whatever else, because the processor is going to take that over, and then they're going to do their piece, get it ready to go to underwriting. The underwriter is going to review it, and then if it's not set up right, they're like, hey, I can't approve this. You don't even have the pay stubs or W-2s or tax returns or this, that, or the other. You didn't do a VOE. Okay, so anyhow, you have to have a team of people and a system in place in order for it to move seamlessly through the transaction in a repetitive fashion. Otherwise, you're going to get really sporadic results. Okay, so our customer satisfaction rate is like 94%. It's actually over that. And so if you go to USAA, for instance, it's in the 60s. Bank of America, it's somewhere between 53 to 57%. When I was in high school, those are failing grades. And
Right.
you don't run a small business by being a failure and consistently failing half of your clients. Your name's not big enough and you're not branded to just attract so many people because they are financially illiterate. All right. So you have to be the best at what you do in order to get your clients to refer you out, and the professionals like realtors, financial planners, divorce attorneys, etc., to tell them, hey, that's the guy. Instead of better call Saul, better call Brad.
Yeah, I like it. Yeah, your clients, because of that satisfaction rates, it's likely they're interacting with your assistant, they're interacting with your team. And no doubt, when you were talking about, one of your biggest struggles is to, retain and hire the right people, it's because you really care about that system.
Yep.
And, entrepreneurs, business owners out there who are struggling with this, know very quickly, you can't replicate yourself. You've got to hire that operations person, right, Justin? You've got to have a great team and a system in place to follow. So I love that you guys are doing that. Let's talk about balance for a second. This flip side, we want to talk about growth. We want to talk about how we're doing. And that's very enlightening, and I appreciate that. So with all of the challenges you're facing in mortgage and financial planning, what has been the number one thing that's allowed you to keep your balance, not completely lose it? And I'm not saying that either of you are, superhuman. I get it. Like, I'm balanced man, but I still have issues with balance, and I get called out all the time. I'm working on it, but I really do believe that balance is something that if we can put our highest priorities in order and we can put our time towards it, we're going to feel that balance. So let's talk about that for just a second. Justin, for you, what's helped you to keep your balance?
It's kind of the culture that we set up here from the very beginning. Family is every bit, if not more important than the business. So we very, very rarely miss family events. I personally have 4 kids ranging from a senior in high school down to a 9-year-old, and that's a lot of activities. They all play multiple sports, and so I'm out of the office for those particular events. But it's made clear to my clients from the beginning that this will likely happen. If it's an emergency, that's why I have partners here. Or we do give out our cell phone to most of our clients if they absolutely need to reach us. But I think when you set those expectations up front with the clients, there's rarely a time where they're upset that you didn't get back to them because you happen to be out of the office at a game.
You bring up something that recently I was reminded of. uh, Priorities change, and depending on circumstances, they may change right then, right? You may need to say, okay, business is super important, but I need to be at this game, or I need to be here for this, thing with the fam, or the wife really needs me here. I've found when people ask me, what's your number one priority, the best answer I can come up with is where I'm spending my time right now, being in the present, right? I enjoy being with my family. Yesterday we went skiing. We had a great time all day. I didn't answer email. I wasn't doing client calls in between runs. It's just not what I do. Made sure to clear that schedule. That said, today I'm at work, right? And I enjoy that time with family, but they know when dad's home, dad's home. Can I be better at it? I try to keep the phone away from the dinner table. I take the watch off so I can't be reached. Like I do all these things. I keep myself, really blocked. What would you say, Justin, helps you to keep those boundaries? Knowing where those priorities are, what's something that helps you to keep them there?
Oh, yeah, that's a good question. I would say the process that we do have in place on when we take on new clients, instead of someone calling in and saying, "Hey, I got this money, can you invest it?" We go through a discovery process, both to figure out, "Hey, do you really need us?" One, am I personally a good fit for you and your family? And then, are you a good fit for our firm, right? And so they know up front where our priorities lie. And I often use the line that no one's going to care more about your money that doesn't have your last name than me, but I am going to care more about the people with my last name more than anything else. And as long as we set that stage up front, and that's kind of the process. Here's another important piece, right? We have our own clients here, meaning I'm the point of contact for my clients, and Lori and Mike are point of contact for their clients. But we all have knowledge about everyone else's clients. So if I do happen to be, whether it's on vacation or out for a family thing, my clients know they're going to be taken care of. They can always call the office. Someone's going to be here that can actually send them money, transact in their account, whatever it may be, answer the hard questions. And as long as we have that culture here, I don't think it affects our clients at all. And it allows us, right, to be away from the business and not worry about whether things are happening the way we want them to happen back there.
Yeah, I think that's a big worry for a lot of advisors, especially if they're bringing them on and they don't have a system and they're selling them on them, like me, versus the team approach.
Right.
And something hits the fan and they call the advisor and the advisor's not available. I think there's a big fear of missing out, of being there for the clients when they don't have the team, system built up. So I love that you do that. That's a great thing to focus in on. Brad, for you, what's one or two things that have really helped you to keep your balance while you're growing?
So time blocking is a big thing for me. I like every Thursday I'm gonna be home at 6 o'clock for dinner versus because I usually work 10 a.m. to 7 p.m. Monday, my wife knows it's gonna be a really long day, and then Sundays I'm always off. Saturdays I may work a half day sometimes. So there's just discussions with the family, kind of like you said, hey, dad's at work or dad's at home. You try to just set things aside and put the phone away and be present when you are there. Like you said, no phones at the dinner table. That's a no. And I have kind of like Justin. I have 4 kids too. I have an 18-year-old that's a senior in high school, all the way down to 2 years old though. And so probably some of that comes from having failed at a first marriage, and then learning some new skills in order to do better the second time around, because I wanted to not have the same pain again of going through that situation again. And so time blocking is big, setting time for exercise. Get up at 5 in the morning. And yeah, you want to push the snooze button, but do it. Just go past it. Push it. Because then once you get out there and do it, it sets the tone for the whole day. And you can get more done, and your focus is better mentally, physically. Everything's all connected. It all just really helps you achieve your goals that day and make sure you can overcome any obstacle you're seeing.
I love it. Preach on, brother. I was there this morning when, you hit the mountain for a day. You get up in the morning going,
Oh,
do
yeah.
I?
You can be sore. Yeah.
Can I make it? And actually, it's been great because I've been working out every day. And because of that prep,
Yeah.
I wasn't sore. Like it was nice to be 43 years old, 42 years old and flying past little teenage kids and then waking up the next morning. I'm good. I'm back at the gym. Right.
Oh,
Cause
yeah.
it's those things that you do every day. I love
Yeah.
it. Those definitely build up over time.
Yeah, it feels great. So I'm 42 as well. Dr. Perry, and I still play basketball. So,
There you go. There you go.
So yeah,
Love it. You have to. It's even more important now to stay active and really keep that because you're right. Mind, body, spirit. It's all related. It's all interrelated. As we, if we come to work with no energy, we're tapped. We're done. Like how do we have balance if we let the our personal sides drain us? So I feel you. And to hear your experience, just a little bit of second marriage and the things that you've learned. What would you say if you were to give back and tell the world now of entrepreneurs and business owners and others even in your industry, what would you tell them to do better? What would be one piece of advice that you've learned that's helped you have better balanced growth?
say no. Say no to the deals that are low flow through opportunities, and kind of like Justin, you after you've built a business and a kind of book of people up, try to look at who your ideal client is, and then focus on that and try to go after them, and fire the ones that are time sucks that aren't profitable. And it takes time to figure that out, and it can be years to develop that. But ultimately, figuring out who your ideal client is and spending more money marketing on them and focusing on that helps you with building the kind of money that you want to have come in from your pay every month.
I love it. Yeah, I think that's really great advice for balance too, right? Say no to those things
Yeah.
that's not ideal so you can say yes to the things or people really
Yeah.
that need you most. So great. Thank you, Brad. I appreciate your advice on this. Justin, throw you back into the mix. What would be your piece of advice to help other entrepreneurs, financial advisors, everyone out there who's listening have better balanced growth?
Um, for one thing, and this is probably more on the growth than on balance, is show up and say what you do what you say you're going to do, right? And that's something that takes a lot of time, but the more you do it, all of a sudden it starts to snowball. And that's when you're first starting out. You said there's different stages, and there's definitely different stages. I mean, there's stages at Edward Jones. You literally pick a neighborhood and you went and knocked on doors, right? I mean, that I would never go back there, and I don't wish it on my worst enemy. But there are different stages, right? So there are some times when you need to be running faster and working harder. And my advice is do that before you have kids for sure, and maybe even before you get married. Try to get past that point, or if it's and I don't think this just applies to financial advisors. I think there's a lot of aging business owners. Figure out what you want to do and go talk to them and see how you can work for them, right? And then eventually maybe take over that business. I think personally the apprenticeship model should come back in big form. You guys probably have the same problems around there as we do here, where you can't find construction people, plumbers, electricians, whatever it is. And I have plenty of those clients who own their own business in those trades and do extremely well. And so I guess it's patience. And there are different avenues to becoming a business owner than starting at square zero and clawing your way up.
Yeah. Yeah. I'm nodding my head. I came from a third generation plumbing company, and it's hard to find good people.
Yeah.
It is really hard. But the apprentice model, I love it. In fact, when I bring team members on to our team, I consider them kind of in that same type of model. They train under the systems that we have, and really try to focus on their improvement, focus on their growth, versus do you have a degree? Like, does that really matter? And some places that really does matter. It really does. Obviously, in very technical, careers, that really does matter. But for what we're experiencing nowadays, I care more about who they are. What's their personality? What is their where are their goals, and what direction are they headed, and are we on that same page? So I love you bring this up, Justin. Thank you, Justin and Brad, for your advice to all entrepreneurs out there trying to have better balance while growing their businesses. Thank you for your time today, and I look forward to hearing more about your successes in the future.
Thanks,
Thank
Travis.
you.
Appreciate